Okay.
They're trickling in. Hi, everybody. For those joining, welcome to EndeavHER. We're going to be starting very soon. We're just going to let people trickle in for the next 2 or 3 minutes. Thank you for joining us today. Seems like there were a lot of people in the waiting room already. Thanks for joining us, everyone. Okay. I see some familiar faces here, or familiar names rather. Hello, hello. Okay. Well, while people are coming in, I'm just going to go ahead and do some opening remarks. So, good evening, everyone, or good afternoon, wherever, or good morning, wherever in the world you're joining us. We have a global audience here today, I think. Thanks for joining us in this next session of EndeavHER. And this is really coming from a successful launch that we had last August, where we had a panel of our own high impact entrepreneurs join us from EndeavHER and talk about their journeys in scaling up their businesses. And just really quickly, for those who are new here and may not be familiar with EndeavHER, let me just give a quick overview of who we are. So we were established in 1997. And we like to say we're a global high impact entrepreneurship movement that drives economic growth and job creation. And what we do is we select, mentor, and accelerate high impact entrepreneurs all around the world. To date, we've screened over 60,000 individuals and have selected over 2,000 founders, leading over 1,200 scale-up companies around the world. And really, this is thanks to the support of our worldwide mentor network. Our EndeavHER entrepreneurs have created over 4.1 million jobs, generated more than $24 billion in revenue each year, and really ultimately inspire future generations to, innovate, take risks, build strong entrepreneurship ecosystems in growth markets. Our headquarters is in New York. We currently operate in over 35 growth markets throughout Asia, Africa, Europe, Latin America, Middle East, and North America. And of course, here in the Philippines, we have 27 EndeavHER entrepreneurs, some of you which you are familiar with. And I believe we have some EndeavHER entrepreneurs from Vietnam and Indonesia and Malaysia and Japan joining us as well. But in the Philippines, these include people like Kenneth Cobonpue, Steve Benitez of Pose Coffee. And if you joined in our EndeavHER launch, we had people like Abetina Valenzuela and Alex Gentry as well. So they're supported by the outstanding business leaders in our network. So mentors, I see you also, EndeavHER mentors. Thank you for joining us today, and we hope you enjoy the session. Before I start, just a few ground rules, which I know you're all familiar with. Because we are in a regular Zoom call setting, just please take note, keep your mics muted. You're welcome to keep your video on. I believe we have our two lovely ladies on spotlight for today's session, so you'll be able to see them. And we'll be going through a number of questions throughout the panel today, which I'll be asking our guests. But if you have any questions, we'll have about 25 minutes at the end of the session. So feel free to drop the questions in the chat and I'll get to them at the end. Whether you want to ask them personally or I can read them out for you, just drop them in the chat and we'll get to them at the end. And while we are kicking things off, it would be great to know who is here actually. So drop your name in the chat as well. Let us know who you are, if you're an EndeavHER mentor, an entrepreneur, if you're not outside or if you're not part of the EndeavHER network yet. Let us know what company you're coming from, what organization, and also what country you're tuning in from so we know who's here. So with that, I'll get to it. So the session of this, as you've seen, is called EndeavHER. And it's our EndeavHER is really our mission to elevate and support more women in high impact entrepreneurship. So we've started conducting these quarterly sessions for our entrepreneurs and business leaders and the like. And today we'll be talking about how to close the funding gap for women. This is a question that we're continuously exploring because despite the majority of startups being founded by women, or at least a significant amount through around the region, there's still a great disproportion in the amount that these businesses are receiving, right, in terms of outside capital, which is surprising given the recent increase of capital being injected in the region. So really, today we're going to be exploring why do you think this is, what can we be doing to make this better in both investor or entrepreneur perspective, or in whatever role you play really in your organization. And so I'm very excited to announce, or to introduce rather, the two equally high impact women here with me today. So we have Shuyin and Patricia joining us. I'm going to do a very quick introduction, but then I'll let you two ladies expound on yourselves and what you do. So we have Shuyin here, and she's a partner at Padamar Capital, and she is responsible for investments in education, fintech, employee benefits, and healthcare companies. And she also spearheads Padamar's gender lens investing efforts, which is why she's here today. But also she's here as a CEO and co-founder of the Beacon Fund, which is a newly launched fund for female entrepreneurs in Southeast Asia's emerging markets. And we also have Patricia. So Patricia is a partner at Connecting Founders, which is a capital advisory firm that's focused on female founders raising growth capital. And she's evolved in issues around women, money, investing, is really passionate about closing the funding gap, which is why we have her here with us today. And she's also focused on emerging markets. So Shuyin and Patricia, thank you for joining us.
Yeah, it's our pleasure to be here. Thank you.
All right. So again, please keep your microphones muted. This is just for the audience, and any questions, throw them in the chat, and also start introducing yourselves as well if you want. But I'm just going to get right to it. Maybe each of you can first share more about what you do in Beacon Fund and Connecting Founders and why. Patricia, maybe we can start with you.
Sure. Thanks for the introduction. Really a pleasure to be here with the EndeavHER community. So yeah, Connected Founders is an advisory firm. So we focus on helping women raise capital. So my background is actually from the investing side. I've been an investor in private equity and investing for most of my career. And that's actually how I got to know Padamar in the beginning. And I joined Connecting Founder because I saw there is a really an underserved market of female entrepreneurs who are growing their businesses, high potential, and they come up to me a lot and ask, we're having all these challenges with fundraising. Do you know why? Given my background as an investor. So now I focus on working with founders in Southeast Asia, and we work with them through the life cycle of the fundraising, from the strategy to kind of the roadshow and then to the execution.
Okay, great. Shuyin, do you want to let us know more about what you do?
Sure. So hi from Vietnam, everyone. It's a real honor and privilege to be here today and share the stage with Patricia and Maita. Very excited to be here. So I think just to expand on the introduction, so I'm a partner at Padamar Capital, and we are one of the most active impact investing firms in Southeast Asia. And I think the other hat that I wear, as mentioned, is just a couple of months ago, we launched a new gender lens investing fund called the Beacon Fund on the Padamar platform. You might tell from my accent, I'm Australian, though I have been living in Asia for more than a decade, and in Vietnam specifically for the past 8 years, and do consider it home now. And I've spent my entire time in the region kind of doing early stage investing and watching the incredible growth and development of the entrepreneurial ecosystem here. I think one thing that I'm very passionate about is gender lens investing, and I would like to give a shout out to the Investing in Women team, who many of you might be familiar with, who really gave us the opportunity to launch one of the first gender lens investing funds in the region, which is the Padamar Investing in Women Fund. And I think the next iteration of that is the Beacon Fund, and I might spend maybe just a couple of minutes explaining how the Beacon Fund came about. So I think, like Maita mentioned in her introduction, I mean, there's this kind of discrepancy or a paradox that we've been witnessing in Southeast Asia, right? On the one hand, there's a very persistent gender financing gap. So, I mean, I think the research suggests, only say 10 to 20% of women-owned businesses, women-led businesses, are actually getting access to adequate and appropriate financing, right? And, honestly, in the time that I've been investing in this region, I haven't actually seen a dramatic improvement in that. At the same time, though, I mean, I think we've all seen it in different ways. I mean, there's been an explosion in, private equity and venture capital activity in the region, right? I think just last year, I guess in the pre-COVID world, $8 to $9 billion was deployed into early stage companies in Southeast Asia. And I think, I felt this super personally in Vietnam, where there's, a lot of VC dollars now chasing a rather limited number of deals. Yet, despite all of this, right, the female entrepreneurs that we knew, right, personally, were not getting funded. And, I think there's many reasons for this, and I'm sure we'll get into this later into the panel. But I think what we saw was there's this classic kind of missing middle problem, right? There's a large proportion of companies which are too small for private equity, don't necessarily fit the growth profile of venture capital, which is a very specific kind of path, and yet are still too big for microfinance, right? As well as some of the emerging fintech or P2P lenders, right? And I think that kind of realization and the desire to fill this kind of missing middle gap was what really inspired us to to start the Beacon Fund. We see this incredible, exciting, underserved opportunity here amongst women entrepreneurs who in this segment. And yeah, I'm happy to share more about that today.
Okay, great. I'm going to open with the big question, right? And we can dive into specific resources and advice that you have as we go along. But the key challenge, why are you both doing what you do? Why do you think there is such a low percentage of female-led startups that receive any kind of funding in the region? And you can talk about your different markets as well if you want. But what do you think is missing, whether on an investor side, or what do you think is missing in an entrepreneur side? Shuyin?
Yeah, it's a question I think we've been asking ourselves for many years. And I think, unfortunately, if there was a very simple solution, I think maybe we'd be a little further along the path of actually addressing this challenge. I think the way that I see it, I think it's a very complex problem, right, with a lot of different drivers. And I think I don't think I'm able to give a comprehensive response, but I can mention some of the things that I've observed, right, and I think have led to this gap. I think from the investor side, right, if we split it that way, I think there is definitely, the need for more diversity on investment teams, right, all the way to the very top. I think it's a commonly quoted statistic that I think only about, say, 10% of decision makers at venture capital and private equity firms are women. And I think while having more women won't fix everything, I think having more diverse voices, I think really does help. You see different opportunities, right, and look at problems and kind of the solutions being posed to those problems in a different way. So I think that's one. I think the other thing that we noticed, ourselves, and I'm comfortable to admit it, is I think unconscious bias, right, and I think there is the need, I think, for both women and men, I think, to go through, training or take other steps to realize what some of these biases might be, right? And I think I noticed myself also displaying bias when I was, interacting with female entrepreneurs. I definitely do not claim just because I'm a female investor that I'm, bias-free or, truly see the potential of female entrepreneurs all the time. I think I also have my major blind spots, right? And, I think there's some really interesting research here, right? And, I could talk for a long time on this topic, but I think one thing that I've noticed personally, and I also do myself sometimes, is, I tend to ask more downside-oriented questions, I think, to women, right? So I think men are often asked about, say, the exciting future, the growth potential, the vision for their business, whereas women are often asked more about, say, risk mitigation and how they're going to avoid downside. And they're always, it's more on the quite negative, often the line of questioning. And there's been some really interesting research to show that this is something that both, I think, female and male investors tend to do when talking to women-led companies. This is just one angle, right? I think there's many different layers to this, but I think my advice here, I think, to investors, or anyone, honestly, also in the ecosystem, right, also mentors, is to try and get some unconscious bias training, or really look into how this could be affecting one's investment process, the way one makes decisions. And I think maybe like the piece that I think Beacon Fund is, and I'll stop here, right? But I think the piece that really spurred the growth or the development of the Beacon Fund is this realization that, I think venture capital and private equity isn't the only way, right? Because I think when we cite these statistics about women receiving funding, right, we're often only focusing, say, on startups or tech startups, or a very specific pool of companies. I think one of the things that we've noticed, right, as we cast the net a little wider, is there's actually a lot of very exciting female entrepreneurs in other sectors, right? And I certainly don't mean to say that, women can't be great tech entrepreneurs or run these types of businesses. But I do think that by broadening the horizon, I think we actually can see many interesting models, right? And actually, like, it expands the pool of different, business models, concepts, and talent, right? That deserves to be funded as well. So I think that's one thing we're trying to do with Beacon. I might leave it there and pass over to Patricia.
That's really good. And I think I'd love to explore this idea of lacking decision makers and unconscious bias later on. But let's switch over to Patricia. What do you think?
So I echo a lot of what Shuyin said. I think having been an investor myself too, I definitely noticed the unconscious bias. And I think the ecosystem is growing, right? With, more, female entrepreneurs in the market and more female leaders and, in the investment funds, as investors, things will slowly change. I think in terms of, and why that's important, I think it's because we're only just becoming more aware of the opportunities of, that female founders and female entrepreneurs bring, right? I mean, this is not 100% all the time, but most of them would, look to products and services that, serves women. And I don't think you need to be female to be able to invest, in female founders, but there's a level of, understanding, I think, that is often lacking, right? I mean, I hear from a lot of founders that I work with, that, some of the questions that they've heard is like, oh, why isn't this product available for men? That was for a femtech health software. So obviously it's not available for men. And then also, similar to what Shuyin is saying, the questions, the female founders are often asked questions, whether on the downside or about their families or, kind of just where the male founders get asked questions about their experience and, kind of the exciting things. So I think those are real. It's still, it's still in the ecosystem. I don't think people are necessarily malicious about it. I think it's, it's unconscious, right? And I think the second bit, totally agree on increasing the diversity of funding as well, right? I mean, I think VC has been the most popular avenue for funding in Southeast Asia, and I think generally in the world, but it is by no means the only option, because I think also as we see the ecosystem growing, there's enough room and enough market opportunities for a lot of different companies, right? And I think we kind of tend to lump things together like, female founders, but, it's not one block, right? You've got female founders who, are, who want to build the next unicorn. You have female founders who want to have a sustainable business, and all of these requires different instruments. So that's where we at Connecting Founders actually is focused on kind of creating a bespoke solution for our clients, where we would look at, work with them to see, okay, well, let's look at your business, let's look at your goals, let's look at where you want to go. And then we can help you figure out, what kind of capital is appropriate for you, whether it's, the full-on VC, whether it's debt, which, I'm glad to see there's more debt, in the market, or something in between, which is, like a mezzanine, like a flexible debt. So I think with, greater option, I think we can more diverse types of female founders, more diverse types of entrepreneurs can grow, all in their own way, right? And I think just to tie it all up, I think part of the bias too is that our model in our heads for, a lot of us of what a successful business person looks like, I think has been modeled historically on successful male leaders, right? With, their own kind of characteristics. I love seeing the growth in, women leaders who are, unapologetically female, right? We're being ourselves, and, we bring our own strengths and diversity, and, it makes for a robust ecosystem, men and women together.
Exactly.
I just pick up on that. I think, I just love what Patricia said, and I think it really resonates with me so much. And I think, in fact, one of the taglines or mottos of the Beacon Fund, right, is to create alternative models of entrepreneurial and investment success, right? And I think, because, I think we've really privileged, one type of, model, which is like, yes, let's become the next unicorn, right? And I think that's made, I think, a lot of people, I mean, both men and women, right, also feel, say, undervalued for the types of really incredible work that they're doing, right? Both on the entrepreneurial side, I think also on the investment side, right? Everyone's like, as investors, it's always like, wow, we had this markup, we had this, et cetera, right? I mean, this next valuation, is it really creating value, right? And I think, what's a long-term value? And I think that's the question I do feel women often ask themselves a little more sometimes, I have to say. So definitely, second Patricia on that one.
Yeah, and I think also for the world, right, for the market,
Right. Agree.
different,
Yeah.
there's different types of products and services, and it takes all types to create this, kind of robust, dynamic ecosystem.
Yeah. These are all, I mean, when you think about it, these are all relevant topics, even outside of the entrepreneur investing world, right? Hot topics today: representation, unconscious bias, diversity, right? But just since we're on that topic already, I'd like to dive deeper before we move on. But one of the problems with unconscious bias is the fact that it's unconscious in the first place. And yes, we know we want this representation, we know we want this diversity, but if you don't know how to make this happen, right, we can't get to there. So I guess what are some prompts that you recommend people maybe tune into or ask themselves in order to make this happen, in order to see diversity in a leadership table or in the products and services offered, or just in the way that this value creation is talked about? Shuyin?
Yeah, I think, okay, in terms of how to weed out unconscious bias, I think that's a big topic. I think the first thing I think that helped us was actually, involving experts, right? So I think, say, as investors, right, if we want specific, say, information on the healthcare industry, we would actually, get healthcare experts, right? Same thing, right? If we want kind of, specific information, tools, and advice on, say, gender or gender bias, right, then we have to also ask gender experts. And I think that's exactly what we did. I mean, we were very fortunate through Investing in Women to have the support of the Criterion Institute, who actually helped us map out our entire investment process, right? And then kind of map out where, bias might come in, right? I think both gender bias and other types of bias in the way that we, say, would, collect our pipeline, right? Or, what actually got into our pipeline, right? Or the way that we did due diligence. And I think, so first gave us, I think, some of the basic tools and language, right, to even recognize, right, that we might have bias. And then also a common language for us to call each other out, right, within the team. Because I think, and having the, and I think we discuss it, every month, right? I mean, how are we going on this process, right? Did any particular investment decisions, did we notice any one of our colleagues or ourselves, right, maybe making some assumptions that, could have gender at its core? And we actually discuss these things as a team. So I think having, first, the tools and the framework, and then being able to have a discussion, on these honestly very thorny issues, right, and kind of uncomfortable issues sometimes, I'm going to have to say, right, to say hey, you're biased, right? Nobody wants to hear that. So how do you actually create a safe space within your team and do it in a non-threatening way? I think accepting that we all have bias, right? I think that's the starting point to act. And we're hey, we all make these mistakes, right? How do we help each other become more aware of them so we can actually begin to change them, right? Because I think, as you say, if we're not even aware, then we go along a happy way, not knowing any better. But I think that's, for us, how we did it. It is quite a bit of work, I have to say. But I think, having a team who was, having a team who was really committed, and I think leadership who was very committed to this, I think that was an important factor for making it, I think, well, at least relatively successful in our case, I would say.
Yeah, I mean, it starts from within, right?
Right.
What about you, Patricia?
Maybe I can speak more from the entrepreneur's perspective because, we see it, from the other side. I think it's something that, we would, tell, our founders, right, that, look, this is the fact, right? This is still happening. So you need to be aware of it. So while the ecosystem is getting better, while, the investors are becoming more aware, which is great, there are things that, we can do from the entrepreneur side. And that's a lot of the work that we do at Connecting Founders, is actually also really getting them prepped up to be able to answer, all the key business questions, being able to pull out, the right value proposition. And, there's also quite a bit of coaching in terms of, how do you present yourself, right? Because I think, while the world is still functioning this way, there is certain kind of measure of success that I think investors look for when they speak to an entrepreneur. And so I find a lot of really, a lot of entrepreneurs are very good operators, right? But it's, fundraising is a completely different animal from operating. And a lot of them haven't really had that experience before. And so, just understanding, what are the questions that you need to answer? How do you answer it so that you come across, as, the strong entrepreneur that you are, who knows your business? And that's kind of, part of how you manage, those perhaps, unconscious bias downside questions, right? I think also for, a lot of founders, part of the exercise is to be able to take a step back from the day to day and look at your business from, kind of a zoom out perspective, because you're always looking at it day in and day out, and you know it so well, I think it's a different exercise in order to be able to distill your business model in a very clear, effective, and authentic way, and you can answer the questions about, these are my key value propositions. These are the key strengths and weaknesses. These are my competitors in the market, and this is how we compare against them, and this is why we are, well positioned to gain market share in this particular market that we're in. And yeah, just to be kind of, to really tell your story in a way that is, I think, fair for yourself too, right? Because a lot of them have all these nuggets of beautiful, kind of valuable things that they don't even often see because it's just a different process between fundraising and operating.
Okay, on that note, let's tackle this animal that is fundraising and see if we can help our audience come up with some more tactical and practical solutions. Something more specific to the type of entrepreneurs and people in our network at EndeavHER. We deal with scale-ups, right? So they've already reached a certain threshold or growth stage, and they're really in that scale-up phase of their business. With the companies that you've seen and that you've worked with, what are the common challenges that founders face when it comes to raising growth capital? And what do you think they should keep in mind or avoid when they are in that stage? Patricia?
Sure. So first and foremost, I think fundraising is a whole separate project, right? I think before you embark on fundraising, you should be aware that it is a big project that's going to take a lot of your time. You need to be able to commit to it. So, and you need to prepare for it before you launch in order to do it successfully. So I think of fundraising having three kind of key phases, right? The first phase is the preparation. The second phase is, the roadshow, whether it's, face-to-face or, via Zoom now. And the third phase is execution. So the preparation phase is actually very important. This is where you figure out, what kind of capital you need based on your vision, based on your goals, like what we discussed before, whether, you want to be a sustainable business, whether you want to, be a big, VC funded company. And that will tie into what sort of capital you should be looking for and what kind of investors you should be targeting. There's a lot of investors out there in the market now. It's very easy to just start getting into conversations with them because, I think as a, ex-investor myself, I always love talking to founders, but I don't necessarily, I can't invest in all of them, right? So you need to figure out who's the right investors for you that would make the time, worth your effort. And then the second big part of it, I think what I touched on before is the story, right? It's a story, but it's also the process of refining your business model. And I think this is really important. It's helpful to get somebody that has experience and that you trust to kind of poke holes in your business model and see if you could, kind of answer those questions and come up with the mitigants, because I think this is probably the first time that you're going to get a lot of people asking questions about your business. And then the third part of the prep phase is, kind of the more admin stuff, preparing your data room, getting all your information in order, and, all the kind of boring admin stuff. And then the second bit is the roadshow. I'm calling it roadshow just for ease of reference. So this is where, you have your investors list, your investors funnel, you have your meeting set up with, a bunch of different investors. And this is basically kind of where you start getting the experience of, pitching your company, and you see the feedback, and you also need to have a strong sense of your company to know, which feedback is relevant and which is not, right? And this is also why it's important to get all your data in order, because this phase will be very busy. You'll be answering a lot of questions, and you don't have time to be doing that while on the go. And it's also important to take advantage of the momentum once you have it. And then the third phase is the execution. So this part is where you negotiate the terms, right? And you do the final documents. So, and on the terms also, I think it's very important for entrepreneurs to understand what are the terms that they want from their investors, what are their non-negotiables, and also get alignment internally. Like if you're bringing in investors in, what kind of rights are you willing to give them? Who gets to be on your board seat? Who do you want to be on your board seat? And there's, I'm sure Shuyin can speak more about this, but there's a lot of different, investment terms that are in the term sheet and in the document that will be new for you, right? It's super important to really know what you're signing up for, and it's okay to take time. It's okay to get, to pause and to get, advice from, trusted counsel, so that, you're, especially for equity agreement, it's something that you're going to live for, like 5 to 10 years, it's a long-term contract, you want to be sure that at least you're signing into something that you feel, comfortable with, maybe it doesn't have to be 100%, but at least, a good, 60, 70%, right?
Thanks for that. That was very thorough. Shuyin, what should they consider from your perspective?
Yeah, I know. I think Patricia gave a really comprehensive and thoughtful answer. I think I would echo some of her points and maybe add a couple more. So I totally agree about being very intentional and thoughtful about the investors that you target, right? I think I see people who've got these spreadsheets are like, oh wow, we could talk to these 80 investors, right? But actually, because I also agree with the idea that fundraising it's a whole project, right? It's a whole work stream. It can consume a lot of a CEO's time, right? And if you're not careful, it can morph into a kind of force of its own. So I think being very targeted and intentional about about your investor base, and I think particularly like nailing your lead investor, right, is so important, right? So I think I've seen actually a lot of times different companies get into this funk where, they've got a lot of people who are kind of interested, but they don't want to lead, right? And, I think once you have a lead investor, a lot of things do fall into place. So I think really being laser focused on securing a lead investor, then investors are a bit like sheep or lemmings. They'll all kind of just come in to fill you around most of the time. And then, also to echo Patricia's point around, being prepared, I think that's, obviously key. And I think, being, again, like starting the process when you're ready and having kind of your, some idea of the timeline that you want to follow for it. And I think, pushing investors on their process up front, like really understanding what it looks like, how many checkpoints, how many, when are the IC presentations, when would they issue a term sheet? Again, like you're probably unlikely to be able to change their process, right? Or make it faster often, but at least you will know what it is, right? And I think, better you go into something knowing it's going to take 5 months or something, right? Even though that might sound like awfully long to you, at least you know that upfront, right? And I think that often is, frankly, the reality of most due diligence processes. I think maybe my, one comment that I would add is I would say kind of more at the Series A, Series B stage, which is where actually Panama Capital tends to invest. It is a different level of scrutiny around, your metrics and your data than, say, a seed stage investor, right? So I think the seed stage is probably the last time you can really sell people on your big vision and your story, and that's awesome. I think when it comes to your Series A and definitely your Series B, right, it's all about your unit economics, your cohort analysis, your retention, all of these things, right? And I think, again, being prepared and having clear answers and really showing, your investors that you do have very strong product market fit, I think that can be a very powerful tool, right? And having the data to support, and an amazing traction, right? And having the data nicely packaged into a story, I think that can really ease the fundraising effort a lot. And yeah, I think maybe the final thing that I would say on this point is that, I think at this kind of growth or scaling stage, right? It is quite a different phase of the company from going to like 0 to 1, right? So 0 to 1, you've got product market fit. And I think that is already a huge achievement, right? Going that scaling phase, the 1 to X, I think it requires a different level of discipline as well in terms of, showing that you have repeatable processes, right? Say a repeatable sales process if you're a B2B company, that, because the company is going to scale very fast, right? From maybe like 20 people to 100 people, right? And then how do you even think about growing your team in that way? So I think these are types of the questions or what investors have in their mind, right? When they're talking to you, they're really thinking about like, okay, great, you've achieved great product market fit in this particular sector. Can you take this nationwide? Can you do this? Can you do that? Right? At a much, 5x, 10x the scale. I think this is at least more from the VC perspective. And I think being able to answer those questions convincingly is really important during your fundraise.
That's a really good point, Shuyin, because I think one point related to that for entrepreneurs is also to, look at your investors list and make sure that you're targeting the investors who are looking at your stage, right? Whether it's, seed or Series A. And and totally echo what you said about, the strategy is different, right? For depending on where you are, for our earlier entrepreneurs, we talk more about the kind of the vision, and then like once you have, like products in the market, then it becomes a whole different animal. And also another point that I want to add is there's been a lot of new investors in the market, which is great for founders. I would suggest to do your research and understand whether the funds that you're targeting currently have money deployed or not, and if they don't, try to get a feel for like when they would, so then you know how to use your time effectively as well. And sometimes it's also good to start the conversation, but you know how to kind of balance it between the people who have dry powder versus the people who don't at the moment.
Okay, there are lots of things in that I want to touch on. The first thing would be this concept of nailing down your lead investor and just being really particular about which investors you're reaching out to, making sure it's a good fit. Something that some entrepreneurs might not think of is actually when to say no. So what is your advice for entrepreneurs and thinking about that process, or maybe to investors, although I guess this is more relevant to entrepreneurs? When should they stop and think and actually say, no, this isn't a good fit? Patricia, do you want to go ahead?
Sure. What a great question, Maida. I think it's a question that is not often asked, right? I think because typically we think about the power dynamics being a little bit different, where the funders have the money and the entrepreneurs is looking for money. But I'm really glad you bring it up, because there are some instances where it's not the right fit. And how do you know whether it's the right fit, right? I think throughout the whole investment process, we'll get a feel for the investor. I think a key, also another really good way to do your own DD on the investor is also to ask, your peers, right? The people in your network, other entrepreneurs, ask them about what their experience has been working with different investors, and whether, they've, really added value. And actually, a really good question is like, how do they react when things don't go well? I think that's a really good measure. But going back to the investment process, I think especially in the execution, the negotiation process, you will come across different negotiation points. I think if at some point, an investor is maybe asking for, let's say, too much control, or like they want certain, veto rights, or they want to be able to block certain things, and you don't feel comfortable with that, I think it's a good first red flag, right? To see how, how that sits with you, and also getting a feel for like, what do they do when you push back, right? Like, are they willing to come up with solutions, or are they just so focused on getting their way that maybe they're not actually thinking about the good of the company? And how to say no, I think this is a very, very difficult position. I think my suggestion would be to have a good discussion with your team, your existing shareholders, if you already have any, or your board, and really ask yourself the questions. Do we want to be in a long-term relationship, with this organization or person? What are the risks? Are there ways that we can mitigate some of that risk? And if if the conclusion is that you can't, then maybe it's better to pass. And you could find other investors, but once you have somebody inside, it's much harder to unravel that.
All right. Shuyin, do you have any insights on that? Maybe in your end, it'll be, thinking retrospectively, actually, maybe it wasn't such a good fit.
Yeah, I think Patricia covered a lot of great points. I definitely agree with doing your reference checks on your investors. In fact, that's something we like to proactively offer, to say like, hey, talk to entrepreneurs we've actually worked with, right? And again, I think sometimes it's more a fit question, right? I don't think it's to say that either one is like a bad person or like, you know, done the wrong, like often it's actually not about that. Sometimes it is, but anyway, but sometimes it's just not a good fit, right? So I think we do encourage actually, you know, entrepreneurs who are thinking about getting funding from us, and this is both at Patamara Beacon, just talk to other people we've worked with, right? Just to get a better sense of what we're like to work with, et cetera. And because I think, you know, we're spending, you know, months and months doing due diligence on you, right? I mean, why not do some due diligence on us as well? I think as for the specific question of how to decide when to say no, I think it is helpful to kind of make a list of, you know, non-negotiables, right? And I think it's quite interesting how sometimes people have like a non-negotiable on, say, like their valuation, right? But actually that's maybe, and I think that's one important factor or term, I guess. But there's actually many other important non-negotiables, perhaps, you know, and as Patricia mentioned, right, around, say, you know, whether it's board seats or, you know, control rights, veto rights, certain like information requirements. I'm not sure, I guess if you're a lender, what type of security a particular lender might be asking for, right? So what is your list of, you know, non-negotiables? And, you know, I think once you're clear on that, I think that actually gives you some, you know, I think setting those boundaries gives you a much clearer picture on when to say no, right? And actually when someone has crossed the line. I think obviously, you know, saying no in a, you know, careful and thoughtful way is helpful. Reputation is everything. I think both on the investor side as well as on the entrepreneur side. It's a very small ecosystem, as I'm sure everyone on this call appreciates. So word does spread very quickly. I mean, we're very conscious of our reputation as well. And, you know, I think, and obviously as an entrepreneur, you should be, I mean, most investors, they know each other, they gossip and all of this. So I think, you know, handle it, you know, delicately in a, and, you know, so there's no, you know, no hard feelings. I think most people hopefully are pretty mature about this, right? Sometimes they know it's just actually just not going to work out. And, you know, it's maybe a good thing, right? That you're not tied together at the hip for the next 5 years in a miserable relationship.
That's great. Actually, you know, on the non-negotiables, I think it's if you can think about this early on in your process in the prep phase, you know, with your other founders, you know, your you know, stakeholders, I think that's a good time to set that, so that when the question comes up, you know how to deal with it. And then I think also just another fit thing is about, you know, the vision, right? You want to make sure that you know, the investor and the company has the same vision about how the company will grow. Otherwise, you'll kind of get into all sorts of disagreements about how things should progress.
And can I add one specific point here? Because I think, you know, Patricia, you made me think of something really important, which is exit, right? Because I mean, I think one area which actually, and again, this ties into, say, Beacon and why we started it, right? So I think one thing we noticed actually as we talk to, I mean, well, all entrepreneurs, but I think definitely a good proportion of female entrepreneurs is they actually may not be interested in the exit, right? And I think, I mean, there's nothing wrong with that, obviously, right? I think they see their company as their baby, right? And something they want to run for the long term. And I think that's fantastic, right? I mean, I actually think that's a model to be celebrated. However, I think, you know, of course, if you take on equity investors, there has to be an exit, right? So I think most people know on this call, you know, funds have, say, 10-year life, sometimes shorter, sometimes a bit longer. But in any case, you do need, the investors need to get their money back at a particular point in time, right? And there are ways to do it without, I guess, necessarily like selling your company. But frankly, an exit often does involve actually selling your company, right? So I think once you take on equity investment, that's an expectation that you need to manage. Otherwise, you should look for alternative sources of funding, right? And I think, you know, whether that's debt or different other kind of, you know, there's self-liquidating structures, there's now like revenue-based financing, all these fancy things. But, you know, I think that actually is one very critical decision that I wanted to highlight, or boundary, right? Like, do you want to actually have this pressure to sell your company or somehow get this investor off your cap table at a certain point or not, right? And I think that can actually shape your fundraising trajectory significantly.
Yeah, absolutely. I think also for entrepreneurs to understand how VCs, you know, like when you exit, you know, how they make the money, right? This is kind of explains the need for the really high growth, you know, like the, you know, super high multiples, you know, that's tied to that. And like when you're talking to like a lender, you know, with like the self-liquidating or revenue-based financing, for example, it's going to be different. So that's definitely one key that you want to explore, you know, what is the right outcome for you?
Right. Well, that's a perfect segue to the next question, which is really, okay, outside of VC and outside of PE, what are the alternative sources of funding out there. I know this is like largely why you two exist, to educate people that there are several alternative sources. Maybe you can touch on the key ones that you think founders should really be thinking of, and then maybe share who in particular this would be good for, or what type of company, what type of entrepreneur these would be good for. Patricia, do you want to kick us off for that one?
Sure. I think the main buckets, at least to date, is, there's, obviously the equity bit, and then there's debt. There's the traditional kind of, bank debts, which, requires collateral. And for a lot of entrepreneurs without land in Southeast Asia, it's usually difficult to get. And the third one, which I actually really love, is, what is typically called, mezzanine debt, which I think Beacon Fund is also doing, is where, you could structure the debt, in a way that is more flexible, that fits more with the entrepreneur. And it could be, your collateral could be based on whether it's, invoices or your revenues, or, maybe your inventory. It's actually an instrument that has been in the market for a long time, but it's mostly, I think, for corporates, for big companies, rather than for entrepreneurs. So this gives the entrepreneurs an ability to get funding, using the assets that they have while still preserving their equity. So I think that's a really good option for a lot of entrepreneurs. And then there's also, the crowdfunding, platform that, I think is growing as well, that, could be a good method if you're raising smaller amounts of money, in the beginning. There's also, some, investing platforms that are beginning to, to grow. I think that mostly, I think in the US and like in other markets, where like it's a group of investors who have like an evergreen fund where the fund can rotate. So yeah.
Yeah, I think just to add on, I think Patricia covered up most of the different options. I will say, I know debt has a pretty negative connotation, right? And let me tackle it head on, right? I don't know. I mean, even myself, I was like, oh, debt, doesn't sound like a good idea, right? And I think that's been shaped a lot by, I think there's a bit of a cultural thing, at least here. I mean, it's not good to be in debt, right? It's just considered like something's gone wrong, even though I think as most finance experts would know, I mean, having a mix of debt and equity is usually the best way to grow any business, right? So I think, debt actually, I think, has been very kind of overlooked in this part of this world. And I think the private credit market is actually very small. And I think a lot of maybe the kind of bad feeling around debt has come from, I guess, the way that a lot of SME lending has been done in this region, right? Which I think is typically based on having, personal collateral, right? So I think, if you're applying for a loan, typically it has to be secured either by land, as Patricia said, or, vehicles, or like cash deposits even, right? So it's very, I mean, it's not actually what small business financing looks like in other markets, right? So I think, and I think that shapes a lot of perceptions. I mean, I think we do hope it's possible to change that perception, or we're trying to change that perception a little bit. I think in many other markets, right, it's not uncommon to have a very vibrant, private credit or private debt market, right? So just the same way there's, venture capital and private equity funds, to also have private debt funds, right? And, as Patricia has mentioned, it's still debt, but I think, there's more flexibility in that way that the debt is structured. I think it's, I wouldn't say not necessarily like a lot cheaper than the banks, but the collateral packages are more flexible. I think typically focused much more on the company's, assets and collateral. It's not like it's unsecured, but it's focused on, receivables, inventory, the machinery of the company, right? Not your house. So I think that's a huge difference I see. And I think even more interestingly, right, and I think this is something we hope to do with Beacon over time, right, is to explore different types of, innovative financing structures, such as revenue-based financing, right, where the investor would get paid back, based on, say a proportion of your cash flows, or, revenue, or, net profit, or whatever the case, different ways to structure it. But it's much more, it's kind of it's again, a creative structure, which allows you to grow your business without necessarily getting diluted. I think the final thing that I would add into the mix here is, there's been a huge growth in, say, P2P lending and different types of platforms, fintech platforms. I think, of course, there's, you know, I think use the same kind of discipline and diligence as you select what might be a good fit for you. I think there's some fantastic tools in the market, obviously some which didn't work out so well. But, you know, I think they can be actually very helpful for smaller amounts of financing, right? So I think if you need, say, you know, $10,000 or, you know, kind of your financing specific invoices or working capital, I think there's actually some really interesting, innovative tools out there with pretty fast turnaround times and procedures. They're not the solution for everything, I would say, but I think if you're maybe at a smaller scale or just need to finance, I lost one AirPod, things quite quickly, I think that they can be a really interesting option.
Yeah, I mean, I think if I may add to it, you know, I think when you're looking at funding for your company, you know, there's different ways that you can slice and dice it, right? Like, you know, maybe, and that's part of the work that we do is, you know, figuring out maybe some parts of it could come from the P2P, you know, some parts of it could come from, you know, equity, and other parts of it could come from the structured debt. And because structured debt is still new, you know, I'm super excited to have Beacon, you know, have this product. I think there's still, I see great potential in it, but I think for the founders, maybe it takes some time to also understand it. And, you know, that's kind of where we hope to be able to also, you know, help the founders and, you know, understanding how it could potentially work, you know, what is the right way to structure it, and, like, you know, working with funds like Beacon to create, you know, more investments in the structure. And also particularly because I think for a lot of the, you know, kind of, a lot of entrepreneurs, like, you know, they're asset light, you know, you're not going to have land, you know, you're not going to have equipment. I mean, even equipment financing is hard to finance, right? But, like, yeah, you're not going to have like a big factory that you can put your collateral on. So bank financing is more often than not, you know, not really an option for an asset light company.
Okay, that's great. So if the audience, you have any questions on alternative sources of funding, you know where to go. But taking a step back, because I think we do have some people here who may not even have started their fundraising journeys yet. We talked about what scale up should think about, but is there a distinct things to consider if this is your first time this is your first time looking for outside capital? What should women be thinking about? Shuyin?
Yeah, I think if you're in that situation, I think it's always, I mean, as general in life, I guess, it's always helpful to talk to somebody who's been through that process before, right? So I think maybe seeing whether there's somebody in your network, right, who is a bit more, you know, who's maybe a few steps ahead of you, right? And I think this is a trick that I always use when I'm facing something new. I think that can be obviously very helpful just to have, you know, that kind of perspective and wisdom and experience. But I think the basic steps, you know, I would say are the same in terms of, you know, preparation, intentionality, right? You know, what do you hope to achieve with this fundraising? Like, certainly fundraising is not something you should do for the sake of fundraising. So what actually, you know, what actually are the needs, you know, capital needs of your business, right? I think all the things that we touched on before, you know, who would be actually a good set of investors to reach out to initially and really prioritize. I think that advice is the same. But I think actually when you're fundraising for the first time, I think one very fundamental thing you have to decide is the issue we touched on before, which is, you know, what do you really see as the growth trajectory of your business, right? Do you want to run this like a venture-backed company? And if so, great, right? Then there's obviously a playbook for doing that. Or do you want to, you know, I think maintain, I guess, more control, right, on autonomy and kind of grow a business on a more sustainable path, right, at your own pace, which, and again, I think there's nothing, I think one path isn't better than the other. I think that it does, that maybe one path is better than the other for certain types of people and then also certain types of business models, right? And I think it's important to be aware of that.
Yeah, absolutely. I fully agree with that. And I think, you know, when speaking to people, I think it's, you know, you want to speak to the right people, and maybe a way for you, you know, to figure out where you would fall in the spectrum is, you know, to get, you know, to talk to people with different business models, right? And then like see, you know, what their journey is like. Maybe you could, you know, talk to somebody who's been, you know, funded, you know, by VC and get a feel for like, what is the expectations, you know, speak to somebody else who's been self-funded, you know, and kind of what, you know, what is the expectation, what's the difference, and then maybe another one with debt. So you could get a feel for yourself, you know, kind of what, you know, as an entrepreneur, you know, personally, which path feels better, you know, for you. And I think there's a lot more information that's available out there now. There's a lot of, kind of female entrepreneurs network, or, female focused funds that are putting out a lot of content. Connecting Founders has done some content as well in collaboration with several investors. We hope to eventually put this all in a repository, on our website, because I think it could also be overwhelming to look, for different contents from, a bunch of different sources. But I think take your time in understanding who you want to be, and then kind of, who you want to be authentically, right? Not because kind of what's like the cool thing is in the market, and then go from there.
Okay, so EndeavHER and is really this organization built on relationships and the network that we have. And similarly, people often see the process of fundraising to be really all about relationships. This is a question that we've actually gotten from some entrepreneurs that we've talked to in EndeavHER. But if this was my first time raising, for example, how do I make those warm introductions? How do I get to know investors? If this is my first time and I just don't know anyone yet. Patricia, maybe you can share.
I would say, start with the people that you know and cast your net wide, right? I think, because the beauty of Southeast Asia right now, I think the ecosystem is still fairly small. So chances are, somebody that you know might know somebody who knows this person, right? I think you can look at your network and just ask them, like if you already know these are the investors that I want to target, do you know, somebody who works there? And to make it easy for the, for the person who's introducing, which is very, very key, you want to make it very easy for them to forward your email. You should prepare a blurb, it's a quick, one paragraph saying, this is who I am, this is what I'm looking for. We're, doing fundraising. We'd love to speak to you for, about X, right? Would you mind connecting? Then you can, tap your network and see if anybody could give you an introduction.
I think the only thing I would add to that is, which I agree with completely. I think the only thing I would add is I really, really love it when, you see an entrepreneur has made an effort to understand like who Panama is or who Beacon is, right? They're like, wow, I see you've invested in this company. We're actually doing the same thing, but in Indonesia. Like, I would love to talk to you, right? And ask you maybe some specific questions, right? And you're like, oh, okay. It's really hard to say no to that. If it's more just like, hey, I'm fundraising and want to talk, right? Then I'm like, oh, maybe yes, maybe no. But I feel much more invested if they've really made the effort to show that, okay, this is, you are the one I really want to talk to in this particular case, right? I think that's much more meaningful.
That's already also a way of kind of thinking about this idea of, is it a good fit, right? It's Absolutely. You've done this,
right?
I am the same type of person. You should be investing in me.
Yeah.
So I have two more questions before I open up the floor. On that note, I see one question already in the chat, which I'll get to later. But audience, feel free to type in questions as well. Or when we're at the Q&A later, you can raise your hand and ask it yourself. But just letting you know that have your questions ready. We'll get to you soon. So on the last 2 points, maybe this is really to give our audience something tactical, like a key takeaway to leave with from this session. One is, do you have any successful case studies or anecdotes who you think women entrepreneurs and founders can emulate? Or if it's not a particular case study, if you don't want to name anyone, just kind of what does this look like? Shuyin, we can start with you.
Yeah, this is an interesting question. I actually found it quite hard to answer because I think there's so many ways of being successful, right? So I actually, okay, I'm going to give a lazy answer, which is to say, I think there's actually now, as Patricia mentioned before, there's a lot of different resources, right? And I mean, and a lot of different, say, funds now focusing on female entrepreneurs, right? So which showcase many different models and many different ways of being a leader. And I think, as I think maybe one theme from this conversation is there's no one right way to be an entrepreneur or run a business or fundraise, et cetera. I mean, I think there's some common themes, but actually the universe of success is actually very broad, right? So actually, I would say it's not necessarily about there's one way of one model of success you should emulate, but more like find those role models who you can really relate to, right? And I think that would be different for each person. Maybe one way, okay, to be a bit more practical, maybe one way of seeing different female entrepreneurs who have been successful, I think, is looking, obviously through the EndeavHER network. I think there's many examples of great female entrepreneurs in that network whose stories I'm sure you can, share and have access to. I think also looking at different, funds focused on female entrepreneurs, right, and looking at their portfolio companies and reading the stories of their leadership teams and the women in them, I think could also be a way to, just find inspiring stories, right? Which I agree are important to keep one motivated and going. But I really don't think there's one path that I particularly promote.
Yeah. Yep, that's fair. Patricia, what do you think?
I think, and it also doesn't necessarily have to be limited to women entrepreneurs, right?
That's true.
I think another way is to just look at businesses that you like, that you admire, that you like how their trajectory has gone, and read the stories and kind of get a feel for how they did it, what is the path, and then you can look at different companies and and follow that, because I think what Shuyin said about success looking very different for different people, I think it's super key, right? I think with certain pathways, the requirements to get there is going to be different, right? Versus maybe a different pathway. So I think you can tap broader kind of examples and see who do you what companies you think have been successful, and whether it's something that you could see yourself kind of being committed to, right?
Okay, well, on that note, what is the one thing that women should keep in mind when going through this journey? If there's just one piece of advice that they should keep with them. Patricia, a big sigh.
I think it's a really important milestone, in your journey as an entrepreneur, when you're at that stage of looking for capital. And I think it's something to be honored. It's a milestone. I think the key, from my perspective, is really understanding that once you take in money from somebody or an organization, it is a fairly long-term relationship, and it's going to change, how you do business, right? In a way, like if you have debt, you have to start really thinking about meeting your debt payments. If you have equity, you have to start thinking about, making your shareholders happy and getting the right growth, and also being with them for a long period of time. So I think we talk about funding, kind of in the startup market as, in a way, like the holy grail, right? So if you get funded, and that's great. But I think there's also the other side to it, which is the commitment that you need to exchange in order for that, for that funds to, and whether and how you're going to honor that and live with that, whether it's debt or a long-term equity relationship.
Shuyin?
Yeah, I think mine is somewhat similar. I think it's for me, it's basically like think long-term, right? And which I think is almost another twist on what Patricia is saying. I think think long-term. I think both in terms of these relationships, right? Because I think I totally agree. These are it's once you sign some legal documents, right, whether it's a debt or equity investor, it's a commitment, it's a long-term thing. And, I think, obviously life's too short to spend on these really, unproductive or, relationships which just aren't, beneficial for both sides, right? So I think you should really enter into these things with a wholeheartedness and enthusiasm, right? You should feel good when you're raising the funding. And I think, it's also long-term in the sense that I think I think there's this resilience, right, which I think a lot of people do talk about on the startup journey, and I think also I can relate to as well. I think even setting up a fund, right, and running it. I mean, I think fundraising definitely has a lot of ups and downs, and it's a tough road, right? I think I won't lie. But so I think having that resilience, where I actually think women do have a lot of it, ample reserves. I think that is a very important thing to cultivate over that journey.
Okay, great. Thank you both. So now we can move on to the question and answer questions from the audience rather, and also if possible, maybe open up a conversation. If there are entrepreneurs or investors here in the audience and just want to share their own experiences and what they think of this topic, feel free to let us know as well. You can type it in the chat or just unmute yourself and speak. I'm going to go ahead and address the questions that we have in the chat so far. So we have one here that's asking, with everyone talking about their financial products being inclusive, where do you draw the line between acceptable and unacceptable interest rates for business loans in Southeast Asia? Patricia, do you want to go ahead and start, or Shuyin? Yeah, we can do both.
Sure. I think a good benchmark is to look at what is the prime lending rate, right? Meaning like in your market, and I can't say a specific interest rate because we're covering Southeast Asia with different interest rates, but a good benchmark is to see like what is the lending rate that good companies or large companies get from their bank, right? That means that you have the best credit, right? And then so if you're an entrepreneur with kind of a riskier profile, you can certainly expect to get higher interest rates because the lender needs to adjust for the rate. So for example, in Indonesia, I think for a company with good cash flow, typically you would see around like 10% for lending, with some collateral. And I think for uncollateralized or softer collateral for kind of maybe earlier stage companies or with like not as much cash flow, you would see an increase to, let's say, like 14 to 16, something like that. So I think you have to kind of get a feel for what people are getting, and then you will be charged a higher interest rate if if you're kind of an earlier stage or like a riskier profile without collateral, typically.
Mm-hmm. Yeah, I think I totally agree. I think it depends a lot on like the type of lending that it is, right? And I think and I think one thing that we've noticed is that for example, to serve say micro SMEs, which I know is not what we're talking about exactly here, but if you are serving say very small businesses, right, the actual cost of underwriting, serving them, maybe collecting from them is actually very high, right? I think then it would absolutely not. I would not consider it like shark loans or very very predatory, right, to be lending at quite a significantly higher interest rate than say what you could get from a bank, right? Because I think the reality is it's just impossible for those types of businesses to get bank lending, right? So I think there is a range. I always like to, so I look at, I think not just the interest rate on a standalone basis, but I think also try and think about what's the cost to serve, right, of that particular segment, and then also what type of profit is that lender making, right? I think where you get into very predatory practices is where the lender is charging very high interest rates, I think, to account for a very high year rates of default, right? So they're charging like very exorbitant interest rates just to assume that they assume that like 20% of their loan book will be wiped out, right? Yeah, and then the spread, I guess, between what they're charging and the kind of their cost of capital is massive, right? Like many tens of percent, right? So I think that's when I think the alarm bells start ringing for me. I think honestly, like I think on some of the fintech lenders, I think as is well known, right, they have rates in the well into say the 20-30%, right, or much more in some cases, and I think I'm not going to say that they're all predatory. I think some of them actually are priced very appropriately. I think it's more like really understanding the product, right, and what they're doing, and what, and what their cost is to run their business.
Yeah, and I mean, it also has to do with how long your loan term is too, right? There's there's a different element to what is the interest rates for like a shorter term loan versus like a longer term loan, because that changes the risk profile for the lender. So I think, there's, I think understanding kind of the different types of lenders that you're looking at, and like Shuyin said, the products, and trying to get a feel for the spread, I think is useful. Yeah, it's a difficult question to answer in one sweep.
No, but that was a very thorough answer. Thanks for that. We have two questions here around this discussion we had in the very beginning of unconscious bias. So I'll start with this one. Let's say that you're an entrepreneur and you suspect that the investor you've been pitching to has unconscious bias at play. How do you proceed from there, and should you have a discussion with investor? So this is You mentioned, Shuyin, difficult discussions within the team. How do you have that difficult discussion with an investor?
Yeah, I think this one, I think that there's definitely kind of judgment involved in like how you would approach the situation. I think it's okay. If it's like, to me, if it's very kind of like blatant and it's like to the point where you're feeling kind of uncomfortable, maybe it's best not just to engage in that particular situation. If it's more subtle, right? And I think often it can be quite subtle, and then you're always like, is that, was that biased? And sometimes even I'm unsure, right? I mean, the situation where I'm like, was that biased? Like, and then you have to ask a few people to kind of confirm that you're not going crazy, right? I think when it's more subtle, it could actually, I think that could be worth a conversation. It's probably worth continuing the conversation, I would say, right? I think it depends, again, I think, honestly, on your personality, the relationship you have with that investor, right? How you might want to point that out, right? I think for some people, it's, you could actually just mention it directly. I think for others, maybe a place where I would start personally, right? And this is more reflecting, say, me. I would try and, I guess, pivot my answer. So for example, if you notice, I think one thing that we touched on before, right? So if you notice, say an investor is asking you like a lot of, questions about the downside, the risks, how everything can go wrong, right? Kind of, implies that you're kind of not very experienced or something, or don't know your business very well. I think there are ways of pivoting your responses, and there's actually, again, like some great research on this. They say for female entrepreneurs who do pivot they acknowledge what the question that was asked, but then they also pivot their response to talk more about the growth, right? How well they know their customer, the success that they've had, right? And give, rather than like going down that spiral of like, downside risks and so forth, they pivot their answer to a much more positive direction. I think that can be one way you can try and steer the conversation in that moment to a more positive angle, even if you do notice that like, wow, I'm getting asked a lot of these questions, which are pretty negative, right? See whether you can maybe, as a first step, pivot the conversation, right, and steer the conversation in a different direction. So I think that's what I maybe would do in that scenario. If it's something else, I mean, it's very hard, right? I mean, I think, if you're asked, say, I don't know, I mean, yeah, directly about your, your personal life or your family situation, right? I think that is a bit harder. I think you're well within your rights, to call that out, right? Or maybe not answer the question. I mean, if you don't think it's relevant for the way that, if it's not relevant for this fundraising conversation or the way that you run your business, right? So I think it does depend a lot. I do encourage female entrepreneurs to, sometimes I know it's very hard sometimes in that moment to respond. I also struggle with it. So I have a lot of empathy for that. But I think even afterwards, right, maybe, talk to someone that you trust, right, see whether there's another way to, or another channel, right, to approach the issue, or somebody else who can talk to the investor, right, who might have some weight with them. Those are some, I guess, rather rambling ideas on what to do in that situation. Patricia, I'm not sure whether you can do better.
Yeah, I think, I want to address if it's, unconscious bias kind of related to your business model, right? Let's say that you're, offering, a product and service, that is targeting women, and you're dealing with maybe an investment team that is, mostly male, and maybe the unconscious bias comes through where they think that there's not a whole lot of opportunities there, right? So, some of the things that I've seen that could work is, for example, maybe, you could show an example. You could show an example of, what your customers' reactions are when they use your products, or, kind of different testimonials, for them to kind of, neutralize maybe the context a little bit, because I think a lot of the maybe unconscious bias for the products and services, also stems from unfamiliarity. Like I read a really great kind of interview with Rent the Runway, and the founder said that in the beginning, they, obviously Rent the Runway now is like a $1 billion company, but in the beginning they had trouble fundraising because the investors just couldn't understand why it's such a big deal that women would rent clothes, right? And I think it's the missing gap of understanding the emotional connection of clothes. And so what they did was like they showed videos of their pop-up stores, and then like the reactions of the women when they're trying on the clothes. And then I think, those are some of the strategies that maybe you could incorporate in terms of showing how your product is, how your product is placed in the market and the reaction of the customers if it's dealing with kind of, market size or market potential.
Thanks for that example. The follow-up question was actually, do you have any anecdotes or case studies showing how unconscious bias towards women came into play and how was this resolved? So that was a perfect example already. You came prepared. Shuyin, do you have any other examples to add, or otherwise we can move to the next question?
Yeah, no, I think Patricia raised a great point around, I think more when the bias comes in at understanding the product level. I think we see that quite a bit too. I think where we also do see it come into play, unfortunately, I think is around, I think, general perceptions around kind of, personality and I think that's a lot more insidious in a way, right? It's harder to address without getting into yourself into these very sticky personal discussions, right? I do see, I've been on calls and in discussions, right, where I see, I think, women often being described more as, I think, young and inexperienced, right? Whereas I think a similar, I think I do see men with similar profiles often being described as, more like promising and like, visionary. There is, I think, or I've noticed, distinctly different language. Okay, not always, right? I mean, there can be, different language used to describe men and women. And I think when it comes down to more these like, supposedly like, inherent personality traits of these people, I think it's much harder to address. I think the way that we try and do it is I think, we've trained ourselves, or if anyone sees it, I think as a team, we're meant to try and call each other out about it, right? As investors, when we're having these investment discussions, right? And I think just ask the question like, hey, would you say that would you just still describe her as, say, aggressive, right? If she were a man, right? I think that's actually a question that was asked to me once, right? And I think that was very helpful, right? Because, again, right? I mean, this, women are meant to be more nurturing, et cetera, right? I mean, it's, and then when we found, a founder who was, I guess, aggressive, but I think actually in a man that's viewed as like hustle or something, right? I'm not sure what the language is used to describe that. So I think I think once you, again, like having the space to have these discussions as a team, I think makes it, I think has really transformed the way that we look at, different entrepreneurs and deals. I think unfortunately with investor and entrepreneur relationships, there is this power dynamic, which is very hard to unpick. So I wish I had a better answer for entrepreneurs on how to, like, when they see this, behavior amongst investors, what to do. How do you call it out? Especially when it's more subtle. I think that is a tough question to answer. I think only some of the different strategies that we mentioned earlier.
Yeah, I mean, I think to your point earlier, Shuyin, I think it's also about fit, right? It's not just kind of continuous, and sometimes like the calling out doesn't always work, and maybe it's not the right relationship to continue as well, right? And I'm so glad you brought up about kind of the personalities thing, because I definitely see that a lot too. I used to do a lot of hiring for my private equity fund, and definitely see that biases and people that we hired, and how female candidates versus male candidates. I think for the entrepreneur side, I think my suggestion is also to also hear how you speak and how you come across. I mean, not saying that you have to change yourself completely, right? But I think there is a certain kind of level of being able to convey confidence and assurance into yourself, in however way that that works for you. But sometimes what I see with female founders is they're not owning their amazing accomplishments as much as they should, or as much as a man would, and it's a pity. So I think the whole ecosystem needs to be improved, but there's also certain things about just kind of owning your space and owning your voice, and really owning what you've done.
I really love that. It's turned into this empowerment session, but this is, I mean, you ladies mentioned this a while ago. It's really all about identifying those tools and that common language that you should be using internally, right? And it's really when you fix the internal team is when that should hopefully radiate to this investor entrepreneur relationship. We have one more question here from an entrepreneur, Holly. I believe she's from Indonesia. So I think, Holly, we might need some help getting clarification unless this is okay with you. But her question is, if there's an investor who invests in a different round, well, we're not there yet, but offered us a session to share opinion, should we accept it? Is it a common thing? Shuyin?
Yeah, I think the question is around, if there's, say, an investor who isn't a fit in this particular round, right? Should we still engage them, or should one still engage them for future discussions? I would say that's pretty common. I think we do. So, for example, for us, say on the Panama side, right, on a more venture capital side, I mean, we do love to meet founders, even when they're, say, at the seed stage, even though we're Series A investors, right? I think it doesn't hurt to have, to begin to get to know people early. So I think, as I think we've emphasized many times, it's the relationship that you're building. It's a very long-term kind of thing that you should be thinking about. So I think definitely it makes sense to have conversations, get to know investors early. I think that's also a nice way to do it, right? I think both of you, you're walking into that conversation knowing like, hey, actually now is not the time, right? So they're not feeling pressure from you, like, hey, these guys want money from us, right? They're also clear about where they stand as far as this particular round is concerned. It's actually maybe a much nicer environment just to get to know each other. I think the one thing I maybe would encourage you to, push for in that discussion, right, apart from obviously listening to their general kind of advice about your business, right, is to see if there's a specific set of metrics or things that they're looking for before they would, actually invest, right? So I think typically they'll be like, hey, you're too early. I'm sure entrepreneurs hear this feedback all the time. But actually maybe asking them like, hey, okay, we totally understand we're too early now. That makes sense. What would we need to show you, right, to begin the conversation again? I think that shows that you're really hungry, committed, also will say, hey, I know I have to deliver certain things, right, before, we can have this investment conversation. So that's what I would recommend there.
All right. So it's not as common. Actually, it's very common, right? Patricia, are you saying the same thing?
Yeah, I see the same thing, and also I think it's a good opportunity for you to get to know people, and also to really agree with Shuyin that it's a good way to ask them, how do you measure success, right? What would make a company like ours kind of investable, for someone like you, and also a good opportunity to ask about their portfolio companies. Maybe there's a certain similar journey that could be applicable for you. But I think building relationships, I think, is super important, and it's it takes time, right? It's you never know when something's gonna come to circle around, and maybe it's not this round, maybe it's not even next round, but they could potentially even connect you to other people. It's kind of just being in the network and getting to know people, because I think ultimately for a lot of startups, that's a big part of the investing question. Also, is the founders.
Okay. Well, that was the last question from the audience. So I guess we can go ahead and wrap up now. I'm just seeing.
I actually have a question for the audience, Maita, if I may.
Sure, of course.
So I've loved seeing how there's a lot more things I think offered to entrepreneurs and to female founders. There's been a lot of different sessions on mentoring, like there's the pitch competitions. I'm curious to ask, the entrepreneurs in the audience, what sort of events or offerings have they found to be most useful, and what you would like to see more in the market that you think, would be helpful?
That's a great question. I think it would help all of us here. So yeah, feel free. I know Holly's an entrepreneur. Not everyone has been able to introduce themselves, but I'm seeing Josie from IFC. Thanks for tuning in from Scotland. We also have Jojo, who's CEO of JG Dev, EndeavHER Mentor. Hi, Jojo. Johanna used to work with us in EndeavHER. So if you're an entrepreneur, just to repeat the question, what types of events do you find most beneficial for you? How can we help you? So would love to know more about the industry trends in Southeast Asia. Startup competition is definitely one thing looking for. Okay. So competitions, more industry insight specific.
Great, thanks. And I think it's something that we, I think we don't have to answer now, but would be really curious, kind of, in our role as, as an advisor and a system builder to know how we can best, create things that would be helpful for you.
Sure. Yeah, just let us know. Feel free to email us. Well, on that note, how can we reach out or learn more about both Connecting Founders and the Beacon Fund, respectively? Yeah, Patricia, how can we get in touch or learn more about it?
I'll share my contact information with EndeavHER, and you can find us, on connectingfounders.com, or also on our LinkedIn pages. Feel free to reach out there. Happy to connect.
Okay, Shuyin?
Great. Yeah, I think very similarly. So I think our contact details are on beaconfund.asia or padamar.com. So I think those are different places you can find us. We have LinkedIn pages where we try and post hopefully relevant resources for everyone. And yeah, I think you can also find me on LinkedIn. That's one way to get in touch.
Okay. Just an addition here on the question of Patricia. For the entrepreneurs in the audience, please email us if you could also let us know what accelerators you participated in and what they found helpful about those programs. So what accelerators or other ecosystem players do to address this gap. So very relevant to the topic. Ladies, thank you for joining us today. And to our amazing audience, thank you for being here and listening in. It's awesome to see so many people really supporting this philosophy and supporting women. So for anyone that wants to learn more about EndeavHER, keep in touch. You can also find EndeavHER on Facebook and Instagram, and you can visit our website, endeavher.org.ph. But if you want to sign up to our EndeavHER network specifically, visit endeavor.org.ph /EndeavHER and just sign up, and we'll let you know about these future sessions happening. And we are aiming to do these at least once a quarter on specific topics such as this one. So I hope you all take what was discussed today and just really think about how you can create your own impact and your own network so that we can really start seeing a rise in successful women-led companies. Again, thank you for wherever in the world you're tuning in today, and enjoy the rest of your day. Thank you, everyone.
Thank you. Bye.
Thank you.